Hello dear students.
Okay, ma'am.
So today we are going to discuss about working capital management. Do you know what is the meaning for working capital management? Can anyone say? Yes? Leah?
Working capital to run day-to-day operations.
Okay. So it is a capital where basically to run the day-to-day operations of the business. For that capital, we used to say that as working capital management. See, there are different names for this working capital. So can you say? Yes? Operations capital, operational capital. We can also say this as rotating capital. Okay. So for running a business, see, say for example, basically we need land, building, labor. This is what a major part to run the business. So apart from this, additionally we need some sort of capital to run the day-to-day operations of the operational expenses of the company, and that is the working thing. Say for example, if 1 crore is necessary for the business, okay, additional, say for example 10 or 20 lakhs is necessary to run the day-to-day operations. Okay, say for example buying the raw materials, doing the operations, paying electricity bill, giving wages to the laborers, whatever. Okay, so now we directly move on to the concept. So working capital management, where it is a capital managing for both short-term liabilities as well as short-term assets. That is for short period within 1 year. Okay, so it has to be done continuously to do the operations, and this will generate the cash flow. What is the purpose of doing all these things? To generate the cash flow. Okay, so and this cash flow, so basically we use for short-term obligations as well as operational expenses, all the day-to-day operations for the company, inside the company. Okay, so this is all about the basics of working capital management. Coming to this part, see here, working capital management, basically it consumes more time. For whom? For finance manager, where he has to plan lot of things for this working capital, how much, right, when it is required, for all these things. And next is, it is, from investment, some portion has to be taken for working capital, and some portion it is represented here as sizable portion, some portion 10% or 20%, somehow we have to take it separately for working capital. Okay, and this working capital, it basically decides the credibility of the company, see whether we can able to repay or not. Okay, if it is properly repaid to all your lenders, then it is fine. If it is not done, so where we need to face the consequences accordingly. Okay, and next is, it also decides the growth of the company. Okay, coming to this part, this is the classification of working capital. So classification in the sense based on value and based on time. Okay, so based on value, we can classify into two types. One is gross working capital, another one is net working capital. Gross and net based on value. Okay, so gross is entire your current assets is your gross working capital. All the components comes under current assets. We say that as gross working capital, where in this particular type, cash will be easily converted into cash within 1 year. Coming to net working capital, difference between CA and CL, current assets and current liabilities. If CA is greater, current assets is greater, then it is positive. If CL is greater, then it is represented as negative, which means if CA, if you are having positive, working capital, it denotes that you are having the capability or ability to repay your short-term liabilities. Where comes under this category, you are unable to pay your short-term liabilities. So obviously, this is what the positive notion. Okay, so positive, this factor gives you the good result in future. Okay, and coming to this side, based on time, one is permanent, another one is temporary working capital. Okay, so permanent, at least minimum investment you should have, whereby that should have the current assets, where you can able to manage all the minimum level of activities, that is the operational activities. Coming to this side, above the working capital, above the working capital, all the categories comes under permanent, and all the cash flows comes under here. It is what varying, it varies, that is what fluctuating, it is not remaining stable. So one time, for one season it is what in very peak condition, another time it is what declining, that is why it is said as fluctuating. Okay, so these are all the different types. And how it is to be maintained, working capital in large or in inadequate, how it has to be maintained. Large in the sense you are taking huge portion of working capital from your investment, this means large. Okay, then what happens? So when you will maintain large, idle funds, idle funds means, see, so many funds that you are keeping, you are not utilizing the funds, that is why it is represented as idle funds. Okay, so whereby that also results, you have to pay some interest. So nothing is free of cost, right? So additionally it has some cost, you have to pay interest rate. So if you are taking large working capital, so these things that you need to face. Coming to this side, inadequate, that is insufficient working capital, your working capital is not sufficient to run the business. Then what happens? Obviously you need to face the risk as well as the insolvency. Risk denotes obviously that is you are just simply shutting down the company. Then how you have to maintain your working capital? Adequate, not large, not inadequate, you have to maintain in adequate form, that is the appropriate form, optimum form. Okay, where that too you can able to maintain balance both short term as well as long term, and that it results in proper survival of the company and then to the growth of the company too. So survival, it supports you in all the difficult times, and growth obviously that always denotes you the good times of your company. So these are all the basics of managing the working capital. Hope you understand.
Yes.
Thank you.
Thank you, ma'am.